Good morning, good morning, good morning. Mr. Michael Brown, he's there already. One sec, invite him. It is, of course, the morning blast with myself and Mr. Brown. Apologies if it's a bit echoey. Let's wait for Mr. Brown to come on down.
Good morning, Ryan. Good morning, everyone.
Good morning. Let me just tell everyone it's live on the old Twitter. Then I can read the legals out. 1 second. Nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PRQ Global Limited, Trainers PRQ or PRQ Suite, or indeed the hosts, which, as you know by now, is the superb Mr. Michael Brown and me, Ryan Paisley. Do you know what? I'm feeling a bit like Mr. Brown today. I was on a train at 5:30 this morning. I don't like it.
Lord, why?
Well, I needed to get into London early before all of these all the blasts and stuff start kicking off. So, yeah. Oh, hello. Someone playing Space Invaders.
No, somebody's not playing Space Invaders. I'm actually sat at home this morning. I wasn't on a 5 a.m. train after a client wine tasting event yesterday, and that was a Bloomberg alert going off in the background. So apologies for that.
Oh, okay. All right. Well, go on then. Crack on.
Indeed, yes. Let's.
From your bed in your PJs.
I'm not in bed, and I'm not wearing pajamas. I'm actually sat at my desk in a full suit and tie because I'm going to lunch
Of course he
later
is.
on.
Of course he is.
Working from home in an outfit smarter than that which I'd usually wear in the office these days. But never mind. Good morning, everybody. In terms of market moves, yesterday was another solid day for risk. The S&P 500 ending the day about 0.6% higher at a fresh record high, which takes us now to 56 record highs for the year. Only 4 calendar years have actually beaten that in terms of record highs, and we do still have, of course, 18 trading days left to go. In terms of catalysts for markets yesterday, there was plenty of news flow, although I would question the impact of most of it, to be completely honest with you. The data highlight was the latest ISM services PMI figure out of the United States, which was considerably poorer than expected at 52.1, down from a prior 56 and below consensus estimates for 55.7. It was, in fact, below the bottom of the forecast range. And we also saw the employment and new orders sub-indices substantially miss expectations as well, but markets managed to shrug that off pretty easily, with focus instead remaining on Friday's US labour market report as the key determinant of whether or not the Fed will deliver 18th of December, and markets this morning pricing a 25 basis point cut at that meeting as around a 72% probability. Of course, we did hear from Fed Chair Powell yesterday. He was speaking at a summit. To be honest, he didn't say much of anything new, to be completely frank. He repeated that rates are on a path to neutral over a period of time, and that the Fed can afford to be cautious in trying to find that neutral rate, while again stressing that the Fed can't make any policy proposals based on the proposed tariffs just yet. They obviously have to wait for those to be announced and be implemented before they are able to start incorporating that into their models and into their policy decisions. We also heard from a couple of other central bank chiefs yesterday. ECB President Lagarde again sticking to the script, repeating that the pace of further ECB easing is not predetermined and that they are not pre-committing to any particular rate path. Lagarde also said that the ECB will have to move from being backward-looking to being forward-looking. I thought central banks were meant to be forward-looking anyway, but never mind.
You know what?
And last but by no means least
want
in
to
this
say
bunch,
it,
we
but-
heard from the Bank of England Governor Andrew Bailey yesterday, who agreed with the FT journalist who asked him whether they are likely to deliver 4 25 basis point cuts in 2025. Nevertheless, the FX market was relatively choppy yesterday, with the dollar ending the day pretty much unchanged around the 106.40 mark, although we have seen some dollar weakness creeping into the market overnight. That in turn has taken cable back above the 127 figure, and euro dollar is currently trading at day highs around 105.55. In terms of market moves elsewhere, that, it was a relatively soft day for crude. WTI down by about 2%, its worst day in around 10 trading days. That came despite some Reuters OPEC sources. Of course, OPEC meeting today at 11 o'clock this morning. Reuters sources reiterating that the 180,000 barrel per day output hike is likely to be postponed for 3 months. This is in keeping with Bloomberg sources that we had earlier in the week. They also rumoured that a potential 6-month delay is on the table, but they also confirmed that a deeper output cut is not a likely option. So that may be why we saw some of the downside in crude yesterday. In terms of other catalysts, it was a relatively busy day for data. The ADP employment figure from the United States marginally missing expectations at 146,000. I would remind you, though, that of course this bears pretty much no resemblance or correlation to the official labour market figures that we get tomorrow lunchtime.
Michael, let's be honest.
And last
Let's be
but by
honest.
no means least,
You,
General Motors. They had a bit of a car crash yesterday, down about 3%
oh no.
on the day. They are taking over $5 billion in charges that are tied to their business in China. So we will see what happens there. And that is pretty much a lot from me. Oh no, one other thing, the French government collapsed, but we kind of all knew that was going to happen anyway.
Yeah, but you got to get it in there, right?
Ryan?
Hello, can you hear me? Can you hear me? Oh God.
Hello?
Hello. Hear me?
Is anybody there?
One sec. Oh, God.
Ryan, are you there?
Yes, I'm here. I'm here. Someone tell him I'm here.
Is anybody there?
Hang on.
Can anyone hear me?
Can you
I'm
hear me
assuming
now?
not.
Can you hear me?
Oh, Ryan, are
Yes.
you alive?
Can you hear me?
I can now. Yes. Hello.
Right. Yeah, I'm not sure what happened there on my phone. One sec. Let me just mute that. I've got a feeling that other people probably could hear me. This also explains why me interrupting you didn't work this time because you couldn't.
No, I couldn't hear a word you were saying. I must admit, I did think that you were being quite well behaved, but
Yeah,
it
well, I was.
turns out your phone had broken.
Yeah, I wasn't being well behaved at all, but you just couldn't hear me. I do have a question for you. I do have a
Go
question
on.
for you. ECB, and obviously, as you said, France and the German government's collapsing around us. What do you think this is going to? What implications will this have on the ECB, in your opinion? Do you think this is more likely to be? Yeah, I know I'm not suggesting they're going to do anything drastic, but what I'm saying is, you know, all things being equal, this is surely going to be weighing on them to be more likely to look to cut deeper in the future, or look to cut, be dovish on the rhetoric. What do you think?
Yeah, I mean, I think the debate around the ECB isn't really one of like what do they do now, because they're just going to cut 25 basis points per meeting until it gets neutral.
That's locked and loaded. Yeah.
I think what this does do though is make it much more likely that they end up going below neutral. Because if
Yeah.
you think about, who would you stereotypically say is going to be the holdouts in the ECB to cut as little as possible? It's going to be the Germans. Well, they can't be in that position anymore.
No, exactly. If
You
anything,
look at what's going on there.
yeah.
They're going to be the advocates for it.
If anything, they want deeper cuts to try and do anything they can to kind of prop it up.
Yeah, absolutely. So I think that's the big implication. It just increases the likelihood that they do take rates into, outright easy territory at some point in the second quarter of next year. The one thing I would say though, and I think Barclays had a good note out about this either yesterday or the day before, the problem for the ECB is that the way their other instruments are structured, so things like the TPI, the Transmission Protection Instrument,
Anagram Central.
basically, honestly, this is basically what they rushed out after Lagarde said we're not here to close spreads. Panicked 4 years ago. But the way it's structured would actually make it very difficult for them to go and start increasing their allocation towards French bonds in an attempt to kind of prop up the market. So I do think it's very much a case of, they're just more likely to take rates lower than their peers, and they were already pretty likely to do it anyway. This just kind of cements
exactly that. Just more reasoning to back it up, right? One thing that I'll go out on, well, it's not really much of a limb, but my prediction is that after the rate now, after they cut 25, because let's be honest, they're going to cut 25. I think immediately after and over the course of the Christmas New Year break, we're going to see lots of dovish, supportive commentary coming out of the usual suspects, because obviously we all know that liquidity is an issue over the kind of those Christmas markets. And with what's going on, they all want to provide as much kind of comfort in terms of language to the market. We will be there no matter what. All this usual bollocks. I think we're going to see a lot of dovish language come out after the cut 25, just because they need to kind of put their arms around the market, especially when you look at Germany and France. And let's be honest, if you're Greece, you're absolutely loving this, right?
Well, yeah, exactly.
But anyway, moving on. Let me do some headlines from our dear friend Zach. So first off, in macro land, US President-elect Donald Trump will be interviewed on NBC's Meet the Press program, which will air on Sunday. So expect loads of sound bites coming out of that. Chinese state media warned against blindly chasing faster growth and signaled more focus on boosting consumption in a flurry of articles setting the stage for the key economic work conference next week. I think that's quite interesting about the warn against blindly chasing faster growth, because they have been very vocal about pretty much doing that, although it has been all fart, no poo so far. Technical term for you. Sticking with China, automakers in China are ramping up exports of hybrid vehicles to Europe and planning more models for the key market. This is exposing the limits of the EU's EV tariff scheme. UK companies face a challenging 2025, according to the British Chamber of Commerce, with an increase in employment costs and potential tariffs on exports likely to hit investments and trading prospects. Sticking with the UK, Britain is forecast to hit peak petrol this year, 2024, according to the new report, with electric vehicles on track to assume a much bigger share of the country's car market. Moving further afield, South Korea's opposition leader, I'm not going to pronounce that one, who's among the leading contenders to replace the sitting South Korean president after a brief martial law decree, is in favor of bringing back short selling in stocks. All hail the short sellers. That's one to watch. I know there'll be many people, experts in short selling, popping up on Twitter on that one. Gold, always believe in yourself, has scope to push higher next year, likely to hitting a record as the Federal Reserve cuts rates and central banks have ballooned to reserves. That's according to Macquarie. German industrial orders declined by 1.5%.
Are you still with us?
Yes. Can you not hear me? I think other people can hear me. Can you hear me? Someone put their thumbs up if they can hear me. Hello? Can you hear me? Can you hear me? Someone tell me if they can hear me or not. Michael Brown's disappeared. Right, so you can hear me. Right, I'm carrying on. Michael Brown's back. Right, let me just invite him to co-host again. This is terrible. Right, Michael, I've just sent you an invite. Where was I? Let me just make sure that's muted. Right. I've said gold. German industrial orders, I'll start with there again. German industrial orders declined by 1.5% in October, performing slightly better than analyst forecast of a 2% drop, according to official data. This decline reflects the ongoing challenges in Europe's largest economy amid global uncertainties. Michael, I have tried adding you back. Let me just quickly check if that's worked. I have. You have got an invite. Let me cancel that. Let me just. Sorry, guys. Invite again. Send co-host invite. Let me know if you got that. Geopolitical news: Ukrainian officials are holding high-level talks with the incoming President Trump, seeking to narrow the wide differences on achieving a settlement on Kiev's war with Russia, even before President. Hello. Can you hear me now?
There we go.
Right,
yes,
let me carry on. Let me carry on with this. So they're looking to, what was it? I'll say, narrow the wide differences on achieving a settlement on Kiev's war with Russia, even before President-elect Donald Trump takes office. Sticking on that theme, the US Secretary of State Blinken and Russian Foreign Minister Lavrov are set to debate Ukraine's war at the OSCE meeting in Malta, their first face-off since 2022. And I'm going to Malta at the weekend. Joy. What else we got? A large number of Americans' metadata has been stolen in a cyber espionage campaign carried out by a Chinese hacking group dubbed Salt Typhoon. They need a rebrand. Senior US official told journalists on Wednesday. I remember reading about this late last night. There's no data was stolen that can actually pinpoint who is who on the thing. There's no kind of like ID data, but it does just give people gives the hackers a shit ton of metadata in terms of habits and all stuff like that. So it's one to keep an eye on. The US has expressed concern after Romania's Security Council declassified evidence of aggressive hybrid Russian attacks targeting its presidential election. And finally, from me, just a few equity pieces. TSMC, sorry, one for Tom Talks Cars if he's listening, told supply chain partners to be prepared to expand production by more than 200% within 3 years amid booming AI-related demand. Foxconn reported revenue for November rose 3.47% year on year to reach the second highest on record. That was $20.75 billion. And they also went on to say that fourth quarter operations are anticipated to show significant growth on both a quarterly and a yearly basis. What else we got? China will set another record for solar power installations this year, even as the industry producing the equipment suffers from falling prices and profit margins. Rio Tinto, this is good news for the UK, hence why it's on my list of things to say. A call for Rio Tinto to abandon its primary London listing doesn't make economic sense, according to the chief executive. That was after an activist shareholder urged the miner to relocate to Australia. Why you'd want to do that, I do not know. Shell and Equinor are to create Britain's largest independent oil and gas company in a joint venture. And Britain's competition regulator on Thursday approved the merger between telecommunications firms Vodafone and Free in the UK. So finally, that saga's at an end. And finally, for me, little fact of the day: global billionaire wealth soared to 14 trillion, according to UBS's latest survey, with the number of American billionaires growing to 835, and they alone hold a whopping $5.8 trillion in wealth. And just a reminder, PIQ is entering, well, we've just entered the seed funding round. So if any billionaires are listening and you want to throw some money, I will buy some knee pads from Screwfix Direct.
No.
Oh, no. Over to you in the studio.
Thank you, Ryan. Can I just say that the technology around these spaces is quite impressive,
Oh,
but
mate,
when
it's
they go
absolutely
wrong, they
appalling.
go terribly wrong. I
It's
don't know whether
appalling.
that's user error on my part or whatever, but
No, well,
it does seem
thankfully
chaotic.
it's not,
Anyway,
because I've
moving
spoke to other
on
people
to
and it's
what's
not.
happening today, it is a relatively light
You can't hear
data
me.
docket ahead, which is just as well, really, because I think, Ryan, you're spending most of the day in the pub and I have a lunch later. At 10 o'clock this morning, we get the latest Eurozone retail sales. Sales expected to have fallen by 0.3% in October, compared to the 0.5% increase that we saw in the month of September. And then at 1:30 this afternoon, we get the weekly US jobless claims data. Initial claims expected. Whoa, that's a big echo there. Initial claims expected at 215,000 from a prior 213. Continuing claims expected broadly unchanged at 1.91 million. And of course, neither of those prints pertains to the November non-farm payrolls survey week. A handful of central bank speakers on the docket: the Fed's Barkin, the ECB's Vujic, and BOE's Green, all set to make remarks as the day progresses. And the earnings docket is relatively light, as of course attention begins to shift to that all-important US jobs report due tomorrow lunchtime. And that is your lot from me this morning.
Can you hear me?
I can, yes.
Yes, right. In that case, let's cut it while we can still hear each other. Everyone, apologies for the technical issues. I don't know what's going on. It seems to be the last week or so, Spaces as a whole has been just an absolute shithole. Another technical term for you there. But anyway, Mr. Brown, thank you as always. I will see you well, maybe tomorrow, in fact. But listeners, you will definitely hear from us tomorrow. And if you are trading, as always, keep it tight, and we'll see you later. Ciao, ciao.
Bye bye.